Yeah, good morning, everyone. Uh, we are seeing some positive tick on Asian market, and uh, that was following the US market also had shown some positive trend on Friday. Uh, the positive sentiment is on account of increasing possibility of deal with other Asian countries and the progress on that by the US. And also there is a talk of some type of stimulus may be coming from Chinese government. So this is all supporting the sentiment in the market, and we are seeing some positive trend in Asian markets, though they are positive by a nominal 0.5 to 0.7%. And in that also Hong Kong and China are soft. If we talk about metal are showing some also profit booking. Aluminum is down by around zero point 0.5, copper also zero point 0.5. Oil is flat, and iron ore is also down by around 0.5% in China today morning trade, whereas steel is showing some positive trend of around plus 1%. So overall, more of a mixed reactions from the international market. Futures of the US market are a bit soft. Overall, the reactions from the international markets are more of a indicating that the sentiment will be more of a sideway. So we had seen some correction on Friday, more of a profit booking. And what we see that today on the lower base, we may see some buying, but overall market is likely to remain more of a in a range rather than showing any great positiveness. So outlook is more of a range bound trade for today's. I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. Today, the market is likely to open with a gap up opening, and we are likely to witness a positive move during the day. Friday, it was a profit booking session, but Nifty somehow manages to trade nearby its 200-day moving average and also maintain a closing beyond that. Besides that level itself, which gives some sort of a relief sign. Now, on the technical front, as of now, 24,200 will be the first resistance level. We need to keep eye on it. Any move above that level, we are likely to witness the positive momentums towards to 24,270 to 24,340 levels on the higher sides. Whereas on low side, 23,940 is the immediate support levels provided by the previous swing supports. Below that level, 23,840, 23,800 levels can be tested. The overall view is positive on the Nifty front as such. So one should definitely hold on their long positions as long as Nifty sustains above 200 DMA moving averages. Coming towards the bank Nifty, 55,000 is the first psychological resistance levels. Above that level, 55,240, 55,570 levels can be seen, whereas the support is placed at around 54,440, 54,200 levels. So the overall setup on both the indices is definitely positive. Long positions can be hold with the trailing stop losses. Coming towards the stock specific, Godrej Consumer Products really looks good on the technical front. We already have initiated a buy call. The counter is fleeing in the formations of the high tops, high bottom formations, well placed above all the important moving averages. Looking towards the setups, we believe that the stock has a very strong potential to reach up to 1330 levels on the higher side. And on the lower level, one can keep a stop loss of 1220 levels. Another interesting counter on the technical front is the Balrampur Chini. No wonder we have seen a retracement in the Friday itself from the 605 to 570 levels. But I believe the stock has retested is the necklines of the patterns, which comes to at around 570 only. So fresh positions can also be recommended at the current market price since risk reward ratio is favorable. 550 is acting as a very crucial support level. So by maintaining that stop loss, one can go for a delivery purpose call for a target of 620 to 630 levels on the higher side. That's it from my end. I request Neerav to take a call forward.
Yeah, thank you, Swati. On the derivative front, see, the data continues to be positive. 24,000 strike holds the highest put base, and most likely you will see a good bounce back from this level. Um, uh, on the call front, 24,500 call has the second highest calls, and then 25,000 call has the highest call base. So there is a likelihood that Nifty can move forward from here up to that 24,500 odd levels as well. Open interest and PCR are at comfortable levels. The VIX has increased. The VIX is the only thing now which one has to look at very seriously, because if this continues to increase, there won't be any one-way move. There will be reversals on intraday trading, and from resistances one should expect those reversals whenever the VIX is high. So yeah, look out for the same. The nearest resistance right now is 24,300 levels, and then 24,500. From the stock specific front, SBI Life, MFSL, KPIT Tech look good. Also, rollovers just happened last week, and from the rollovers, it is quite evident that banking again will do well. Especially the larger cap stocks can probably do well. So the likes of HDFC Bank, Kotak Bank can do very well. They're very short on open interest. So with less open interest, they cannot fall, which is a good sign. Um, Another thing is the others like Reliance, Adani Enterprise. These stocks have very less open interest, so they are very likely to move up from here. So yeah, look out for the same. They can do very well going forward. So that's it from my side. Like to have the fundamental team to take over, please.
Thank you, Nirav. Good morning, everyone. A couple of results announced over the weekend, and we will provide outlook for these companies post its earnings calls. Atul Limited posted the result in line with expectations. Revenue grew by around 20% on a YOY basis, and operating margin reported at 15.4%. The stock is trading at a PE of around 24 times to FY26 earnings. Rosari Biotech Limited posted the result ahead of expectations. Revenue grew by around 23% on a YY basis. This is mainly led by growth in its HPPC segment with around 28.7% growth, and textile specialty segment and animal health nutrition segment has seen moderate growth. Operating margin reported at 12% versus the expectation of 12.4%. In the press release, the management has announced additional capex of rupees 192 crore for its parent as well as its subsidiaries in order to support its future growth. Also, commissioning of these incremental capacities is expected by Q4 of FY26, while ongoing capex is on track and expects commissioning by Q2 of FY26. The stock is trading at a PE of around 23 times to FY26 earnings. Manorama Industries Limited posted the result. Result has improved for the quarter as well as for the annual. Revenue grew by around 80% on a YY basis for the quarter, and operating margin reported at 27.4%. For the year, it has achieved the revenue of rupees 771 crore with 69% growth. With this, it has surpassed its guidance of achieving rupees 750 plus revenue, 750 plus crore revenue. Additionally, on the operating margin front, it has achieved 24.8% margin, again well ahead of its guidance of in the range of 23 to 24%. In the last con call, the management has highlighted that it is likely to achieve revenue of rupees 1,000 crore plus crore revenue for FY26 with capacity utilization in the range of 75 to 80% by FY26. While we are positive on the stock, we will provide further updates from the con call. The stock is trading at a PE of 65 times to trailing EPS. Thank you.
Good morning, everyone. couple of results. Tata Technologies reported numbers marginally below expectations. The services business of the company remained flat for the quarter, while there was significant reduction in the product and its education business. EBIT margins saw improvement of 30 bips quarter on quarter due to operational efficiencies by the company. The BMW joint venture, which was launched in November with 100 people, is scaling faster than expected and would soon touch a four-digit headcount milestone for the company. And the share of profit from this JV has been a significant uplift in Q4 for the company and expects this momentum to continue. So overall, the company has guided Q2 to be Q2 to be better than Q1, and then henceforth Q3 to be better than Q4. So stock is available at 37 times FY26 earnings, and one can accumulate the stocks at dips. Secondly, Oracle Financial Services reported improved numbers, wherein the revenues grew 4.5% on a year-on-year basis. EBITDA margins also grew 300 bips quarter on quarter. Outlook for Oracle Financial Services remains positive. Thirdly, Zensar reported its number marginally above expectations, wherein the revenues came in 0.9% quarter on quarter, little ahead of street expectation. Even the EBIT margins came in with the street expectation at 13.9%. What is noteworthy is the order book of the company. It has been continuously growing. For the current quarter, there has been a 17% Y-on-Y growth and 4% growth in quarter on quarter. It has been reporting about $200 million order book mark consequently for the last 3 quarters. So even the TCV conversion is high as per the management. On the flip side, the TMT, healthcare and consumer verticals where the company has higher exposure are prone to global uncertainties. So one can keep the stock in a wish list and accumulate it. Once the uncertainty is cool off, the stock can see good momentum backed by good order book position. That's it from me. Thank you.
Good morning. A couple of banks and NBFCs posted its results. So, Shriram Finance results were in line with expectations. NII came at 13.4% YOY. Profits grew by 9.8% year on year. AUM grew by 17% year on year, led by robust growth in MSME, farm equipment, passenger vehicles, and two-wheeler portfolios. Asset quality improved at GNPA came at 4.55% and net NPA came at 2.64%. The stock is trading at 2.2 times trailing price to book value ratio, and we are positive. RBL Bank results were in line with expectations. Advances came at 10% year on year and 2.4% sequentially. Net interest margin came at 4.89%. Profits came at 69 crore. PAT declined by 8.5% year on year due to slowdown in loan growth, compressions in margins, and higher credit costs. And asset quality came at GNPA came at 2.6% and net NPA came at 0.2% to 9%. Stock is trading at 0.8 times trailing price to book value ratio, and the outlook is neutral for the stock. L&T Finance results were below expectations. NII came at 8.2% year on year. Profits came at 636 crore versus expectation of 627 crores. Grew by 14.9% year on year, and gross NPA came at 3.29% and net NPA came at 0.7%. The stock is trading at 1.7 times price to book value ratio, and the outlook is neutral. And lastly, DCB Bank results were ahead of expectations. Advances grew by 25% year on year and 6.8% sequentially. Net interest income came at 558 crores versus expectation of 571 crores. Net interest margin came at 3.29%. Profits grew by 13.7% year on year. Asset quality improved. GNPA came at 2.99% and net NPA came at 1.12%. And the stock is trading at 0.8 times price to book value ratio, and we are positive for the stock. Thank you.
Good morning. Today one IPO will be opening. The name of the company is Ather Energy. Details of the IPO are like issue size is around 2,981 crore. Issue consists of offer for sale aggregation up to rupees 355 crore, and fresh issue up to rupees 2626 crore. Net proceeds shall be utilized towards funding funding of capex for establishment of e-two-wheeler factory in Maharashtra, repayment of certain borrowings, investment in research and development, and marketing initiatives. IPO price band is 304 to 321. Talking about the company, Ather Energy is a leading Indian electric two-wheeler company focused on building high-performance EVs and connected ecosystem, including in-house developed software, charging infrastructure, and smart accessories. Its capital-light model and integrated design offer agility, but ongoing losses, flat market share, and heavy dependence on external suppliers raises concerns. On the valuation front, Ather is commanding a premium, trading at EV by sales multiple of 6.8 times versus Ola's 3.9 times. This indicates that Ather's IPO is priced more aggressively despite its higher losses and lower scale. Hence, we assign a neutral rating for this IPO. On the result front, Force Motors results improved. Revenue from operations grew by 17% year on year. EBITDA grew by 18% year on year. EBITDA margin came at 14% versus year on year 13.9%. And stock is currently trading at P of 29.7 times TTM EPS. Maruti Suzuki India posted the result below expectations. Revenue from operations grew by 6.4% year on year. EBITDA declined by 6.9% year on year. EBITDA margin came at 10.4% versus expectations of 11.9%. But is in line with expectations. And stock is currently trading at P of 22.1 time FY26 EPS. We attended con call of Maruti Suzuki India. So the Indian passenger vehicle industry grew by 2.5% in FY25, much lower than the 8.4% growth seen in FY24. This slowdown was mainly due to affordability pressures. However, Maruti Suzuki performed slightly better with domestic growth of 2.7%. Looking ahead to FY26, the company expects the domestic market to grow modestly by 1 to 2% as the entry level segment remain under pressure. Despite this, Maruti plans to outperform the industry supported by new SUV launches. On the export side, they are more positive, targeting a healthy 20% growth. Uh, Maruti will also entering the electric vehicle space with the launch of their first electric SUV, the e-Vitara. In the first half of FY26, they are aiming to sell about 70,000 units, with a large part of it going to exports. Management noted that EV and hybrid adoption is still low in India, with the EV penetration at just 2.7%. They also acknowledge that electric vehicle will structurally have lower margins compared to their current products. On the news front, M&M will acquire a 59% stake in SML Isuzu for 555 crore at 650 per share. M&M will also launch a mandatory open offer to acquire up to 26% from public shareholders. This move aims to double M&M truck and bus market share to 6%, with a target of 12% by FY31. So this is a positive news for Mahindra. Thank you.
Good morning. Hindustan Zinc Limited posted their results. Result is in line with expectations. Revenue from operations came at 9,087 crores, which has grown 5.5% quarter on quarter and 20% year on year. EBITDA margin was in line with expectations. We also attended the con call of the same. A few highlights are: the company achieved its highest ever mined and refined metal production in FY25, reinforcing its position as the world's largest integrated zinc producer. Mined metal production for Q4 was 310,000 tons, the highest ever for the fourth quarter since the transition to underground mining went up 17% quarter on quarter. Zinc and silver prices rose 16% and 29% respectively over the year, driven by persistent supply deficits, with the deficit expected to continue in 2025. Zinc cost of production hit a 16-quarter low at $994 per ton in Q4 and a 4-year low of $1,052 per ton for the full year. The company has announced a $2.5 billion investment plan to double annual production capacity to 2 million tons over the next 5 years, with expansion work starting in Q1 FY26. The stock is trading at FY26 EV by EBITDA of 9.89. Our outlook is neutral on the stock. Lloyd Metals and Energy Limited posted their results. Result is declining. Revenue from operations has declined 29% quarter on quarter and 23% year on year. EBITDA margin came at 22% versus quarter on quarter 32% and year on year 30%. The stock is trading at a PE of 13.9 times FY26 earnings. India Cements Limited posted their results. The result is okay. Revenue from operations has grown 27% quarter on quarter and has declined 5.5% year on year. EBITDA margin came negative at 0.2% versus quarter on quarter negative 20.2% and year on year positive 3%. Stock is trading at a PE of negative 14.5 times trailing EPS. Thank you.
Reliance came up with the numbers, and the numbers were ahead of expectation. We had seen some revival in the retail segment in the Reliance business, and Geo was more of a stable, and even oil and gas has shown improvement. So overall outlook for the Reliance industry is positive. Apart from that, Jeswal Nico, a smaller company, has come up with very strong number. They are basically in steel segment and also in castings. The result up move in the result was driven by their plant getting refurbished. Blast furnace got refurbished, and production from that has started in the current quarter, and which has boosted both revenue and profitability. We had seen Jeswal Nico in the past had with lot of problems with debt and all. But with this, it seems like they are reducing their debt also. So overall outlook on Jeswal Nico, considering their valuations, looks attractive. Ramkrishna Forging has said on Saturday that they found some inventory mismatch while taking the physical inventory of their product, and they found that the inventory is short by around 4 to 5% of net worth. That will be working out to somewhere at around 100 crores shorter inventory as compared to what has been written in the books. So that will have one-time negative impact on their books, which will be provided, and this will act a bit negative for Ramkrishna Forging in short term. That's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in gold, prices are supportive at 94,700. So pullback can be witnessed till 95, 200, 300 levels, whereby one can initiate a sell and maintain a stop loss of 95. 600. On downside, we are expecting 94,700, and if prices sustains below 94,700, then further correction is expected till 93,500, 93,000 on lower end. Can buy for a pullback and then again sell. And in silver, prices are expected to test 96,500 on lower end. So wait for a pullback around 97,500, then initiate a sell with a stop loss of 98,300. In metals, copper, we are expecting sell on rise. So selling around 855 is recommended with a stop loss of 860. On downside, we are expecting 845, 840 levels. So selling on rise is recommended. Wherein zinc, one should wait for a pullback till 250, 250, and then initiate a sell with a stop loss of 255. On downside, again, 249.50, 249 is the level where also one can initiate a buy for a pullback, strictly maintaining the stop loss of 246. And in crude oil, we are expecting a pullback. So buying on dips is recommended around 53.80, 53.70, and maintain a stop loss of 5300. On upside again, 5500, 5550 is the level where one should book profits. And in natural gas, we are expecting a pullback till 280, 285. So buying on dips around 265 with a stop loss of 255 is recommended. So buying on dips in natural gas is recommended. That's it from us. Thank you very much.